We've seen 7 rate rises in the last 7 months, and a lot of borrowers out there are hurting. There's a number of people that are coming off their fixed rates and going to have their rates double and their mortgage increase in repayments. We're going to tell you the exact steps you need to take to get your rate down with your lender today.
I had a phone call yesterday from Tommy. He'd been with Westpac for a couple of years and he'd seen 7 interest rate rises every month. A new letter would come in the mail saying, "Hey, Tommy, your repayment's going up, your interest rate's going up. Keep paying, you're paying higher." And he was getting sick of it. So about a month ago, he called Westpac and said, "Hey, Westpac, my rate sucks. I want to get a better interest rate. What can you do?" They said, "Tommy, we really appreciate you as a customer. We love having your business. We love taking your money, but you're on the best interest rate at the moment. There's nothing we can do." So he reached out to me and said, "What can we do? Can we look at refinancing?" We looked at options. And unfortunately, at the moment, he wasn't in a position to refinance. But I said, "Tommy, if you try this script, if you give Westpac a call, I guarantee you're going to get a better result." You see, with banks, they have different teams that have different targets. So when you call the general customer service team, their job is to keep you happy as a customer, and that's about it. But within the banks, they have a different team called retentions. The retention team's sole job is to stop you from leaving the bank. And what they didn't know is Tommy couldn't leave the bank, but they didn't need to know that. So I said to Tommy, to call the bank and say, "You're about to leave. Tell them you're about to go to ING. They've offered you a $3,000 cashback and an insane interest rate of 4.59%. It's almost 1% lower than what Tommy was currently paying with Westpac." He said, "Oh, are they going to check? How are they going to know?" It doesn't matter. The retention teams have their own sales target. They have a target where they can't let every customer leave, and they'll do everything in their power to make you stop. Tommy called up the bank. He asked to speak to the retention team. He told them, "Hey, I'm going to ING. They're giving me a cashback, a way cheaper rate. See you later, Westpac." And guess what happened? The retention team matched that offer from ING without Tommy having to change his bank. Here's the thing. You can call up your bank today if you're on a variable rate and try this very script. Ask to speak to the retention teams. Tell them another offer from a similar bank, even mention a cashback. Tell them you're about to go, your foot's out the door and you're going to leave, and watch what they can do. Failing this, you can look at changing products as well at the same bank if you're not in a position to refinance.
Jayden, I think this is really relevant, especially if you're on a current fixed rate. You might have fixed in for a couple of years at 1.99%, and now you're going to find your rate reverts to a high rate, 6 or 7% in some cases, and you don't have an ability to refinance because your circumstances have changed. Does this strategy work if your fixed rate's ending and you're about to go on a variable rate as well?
It's something that we're proactively doing with a lot of our customers at the moment, because when you sign up for a fixed rate way back when, the banks have a revert rate. So they'll have generally a discount that's built in there. In some cases, with some banks, they actually just put you back on the standard variable rate, which is in the 7s at the moment. It's insane. What you can do is before the fixed rate goes back to variable, you can call up your bank and say, "Hey, my rate's going to change back to variable in a month's time. Can you tell me what discount I'm going to be on? Because otherwise, I'm going to look at going to another bank. I've got a better offer from Bank down the road. They're going to give me cashback, all this stuff," and try a similar script to what I mentioned before. You'll be amazed at the results that you can get here. Equally, like I said, what we're doing with our existing customers as a broker is renegotiating these before the fixed rate ends to make sure you're not going to get caught out and end up on a really crazy high variable rate.
Say you are successful in negotiating a better deal with your bank, and say in 6 months' time, you want to go back to the bank and ask the same question. How often can you actually do this? And how many times can you get a cashback from the same lender?
Not all banks will give you a cashback to stay. There's only a couple of them, generally is some of the bigger banks, and they'll pretty much say that you need to stay with us for at least 90 days. We won't process a discharge request, which is a request you have to sign to switch banks, for 90 days, for 3 months. There are some cases, though, with some of the small lenders where they'll only offer a rate review, a discount review every 12 months. Keep that in mind. You want to use that one wish a year wisely, because the process of refinancing can still take 4, 6, 8 weeks sometimes by the time you get your loan approved and switch across. So it is a bit of a process. So if you're having to change lenders, you don't want to be doing that every 3 months.
Say you are successful, you've negotiated with the lender. How quick do they actually reduce your rate? And when will you see this affect your bottom line with your next monthly repayment?
This does change from lender to lender. For example, with Commonwealth Bank, when we've been able to renegotiate for existing customers, in some cases, they apply the higher discount, the lower interest rate right now, immediately, the same day. It shows up in your net bank and you're saving money today. Other banks like St. George and Westpac, that can take 10, 15 business days to process the request. There are people in the back office typing up, changing things, the margin, etc. So it can take 2 or 3 weeks to update. But as I mentioned before, it can take a month or so to actually refinance from one lender to another. So it still is the quickest way. If you can get a bit of a better discount, squeeze a little bit of margin from that bank and put it back into your pocket, you're going to be better off because it's going to be applicable a lot quicker than if you look at moving banks.
If my fixed rate is coming up in the next 3 months' time, should I start looking at my variable rate now?
I definitely recommend getting onto things early. Depending on the time of year, banks tend to close or slow down over Christmas, Easter, over different holidays. So it can take a little bit longer. And as I mentioned before, it can take 4 to 6 weeks, sometimes longer, depending on your situation, to actually process the refinance. If the bank has to get a valuation, you want to have things ready just so when it goes back to variable, you don't get caught. In fact, earlier this week, I was speaking with Tim and Sarah. They'd built a beautiful home 2 years ago. They'd used RAMs to build the home. So their interest rate was going from 2%, it was fixed, they were feeling really good, to 6.7%. They tried calling up RAMs and saying, hey guys, I can see my interest rate's going back to variable next month. 6.7% seems a bit out of market. It's about 2% over. What can we do? RAM said, sorry guys, nothing you can do. That's the best rate we can do for you at this time. What do you want to do? They weren't willing to renegotiate their property. Rams didn't want to have a look at the fact that their home value had increased by a few $100,000. They contacted us. We were able to get a new bank on there looking at a lower interest rate, which meant that instead of it going back to 6.5% plus next month, we're able to get them straight into the new bank and get all the benefits plus a cashback to cover any refinance expenses. Which is a common question. How much does it generally cost to refinance? Can it be tens of thousands of dollars?
The cost to refinance is actually quite affordable. That's usually about $350, depending on the lender, and then government fees. That's anywhere from $100 to about $200, depending on the state you're in, to discharge the mortgage. So that gives you a bit of an idea. In total, you're looking at anywhere around that $700 to $1,000. A lot of lenders nowadays are giving $2,000, $3,000, $4,000, up to $6,000 cashbacks. So you can more than cover the cost of refinancing with a lot of these incentives on offer.
Fortunately, the banks got rid of deferred establishment fees and some big costs there. Unless you've fixed at a really high interest rate, there's generally no penalties or early repayment fees applicable in the Australian mortgage market.
Let's say you've accepted an offer from your lender. They've put you on a lower rate. Let's say they give you 4.99% and you go, happy days, I'm happy to accept it. They give you no cash back. But then all of a sudden you see, or you talk to a mortgage broker like ourselves, and you see that you can get nearly 0.5% off plus a large cashback incentive. Is there anything stopping you from moving once you've renegotiated with your lender?
No, it depends on eligibility. I've spoken to a lot of people this week who have recently been self-employed, for example. So they might have been working as a salary for the last 20 years, decide to go out on their own and start a business 12 months ago. And so if you've had a change in situation, you might not actually be able to refinance. By and large, if you're still working, if you're making good income, if your property's gone up in value and you've made your payments on time, there's going to be a bank out there that's keen to refinance, get a cashback, save you money on interest rates, and potentially get a better structure. That's one thing we do help out with, is making sure your loan's set up in the right way to achieve your goals. Are you wanting to pay it down as quick as possible for small amount of fees? Are you thinking about turning it to an investment property? Do interest-only repayments make sense in your situation? Do I fix or go variable? So all these conversations we're having all the time, every day with different customers to work out what's going to make sense. And your current bank might not be giving you all those options and suiting your needs. So at Hunter Galloway, that's what we'll do. We'll sit down with you, make sure your loan's structured in the best way to help either build your portfolio, to help you pay down your debt and achieve your goals.
If you're looking for a great mortgage broker, then look no further. Hit us up at huntergalloway.com.au, where you can fill in the contact form and get in touch with us, or call us directly on 1300 088 065. We'll see you next time.